Good sound.
Good morning, everyone.
Good morning.
Hello.
Good morning.
Good morning.
Hi. Let me just see. Still waiting for Duncan to appear. Okay. While Duncan still hasn't appeared, anybody again who wants to volunteer like last week to be a co-host? Anybody there?
What's it involved?
Just letting people in. When you see people that says people are in the waiting room, just say admit.
Okay, yeah, I'll give it a go, love.
Yeah?
Yeah.
Okay. Oh, are you actually? There's no problem. It's Duncan. Duncan just came in, so he's you can do it. Good morning, Duncan. And just making you co-host. Okay. Okay. So everything is sound loud and clear, I hope.
Yeah.
Okay. Today we're carrying on what we were talking last week, and there's a few things that I wanted to share with you, and I think are really interesting to look at, looking at the real work that goes on in blockchain technology, apart from concentrating on price movements and what can make you rich tomorrow, instead of looking at the real stuff that's going on. People that work anytime, whether things go well or go badly, prices go up, prices go down, but still, developers get up every morning to do certain work, irrespective of price and adoption. But there's quite a few things that I wanted to share. So let me share my screen. So we can start looking at doing that. Okay, just rearrange some items. Okay, first of all, something that I think we should all be aware of, and it's kind of a danger of being involved with certain things. And you might have heard about kind of like a hacking into some decentralized finance protocol in the Solana blockchain. Okay, and if you were wondering what's happened yesterday with the price of Solana, they saw quite a roller coaster. That is what is happening now. More than 300 million were stolen from this protocol. Although they now kind of like replaced all the funds that were stolen, it still raises questions about the security of certain protocols compared to others. And here we're looking at different blockchain. So, where at the moment everything is exciting, everything is new, and we all want to get on the next great things, and we're all jumping onto all these different blockchains. Sometimes it is important to understand all the elements that need to be put in place to make sure that you as a customer, as a user of these services, are completely protected. And there is a big difference between different blockchains here. Okay. Sorry, can you all mute, please, and get some background noise? So just make sure that you're muted. Okay. So there is a big difference between projects. I mean, Solana, although it's been the darling of 2021, has made a lot of people a lot of money, has many questions in terms of protocol. Because as I said to you before, I mean, we're talking often in blockchain, we're talking about the blockchain trilemma. So like the three elements that are important to look at in blockchain are decentralization, scalability, and security. Okay, and often when blockchain concentrate on one aspect, is at the cost of the other aspects, and so on. So Solana has staked everything on the scalability, on having fast transaction, cheap transaction, but at a very high cost. Okay, the cost has been decentralization because Solana is very concentrated, very centralized, and in many cases it's actually been switched off and switched back on as you would do with the television, which is not really what encourages to have trust in a project like this. Because it means that there is somebody in control. We're talking about here this decentralized world, so nobody should have that much power on any of these protocols because they belong to all of the users. Okay, so when this happens, and it happens more than a few times, it raises a lot of questions. And although there may be people like me and you that want to, get on projects like Solana because they're great, because they can do NFTs and they cost a fraction of what it costs in Ethereum. But when you think about from a point of view of an institution, for example, that as at its first remit is to ensure that the funds and the management are safe, they wouldn't touch this with a barge pole, I'll tell you. Okay, so this is just something to make you realize the different aspects that different projects concentrate on, and sometimes we don't think about these things when we start getting involved and buying the tokens. But they're very important. They're very important as well. Last week we were talking about changing the subject, about the correlation between the top cryptos and US stocks. Okay, and this is at the highest level that it has ever been. So both for the Nasdaq 100 and for the S&P 500, this correlation is at a record. So what that means is that stocks go up, crypto goes up. Stocks go down, crypto comes down. Okay. Although they are correlated, also crypto is more, it fluctuates more. So stocks go up, crypto goes up more than stocks usually. And the same way on the way down. So if stocks go down, crypto goes down even more. Okay. So this is why lately all the movements that we've seen in price are not really crypto related movements because of things that have happened in the crypto world, but they're microeconomic related. So everybody was listening to Jerome Powell announcing what the stance of the Federal Open Market Committee was when they decide about interest rates, about tightening on the monetary policy. And this is what has got everybody talking, in a sense, because the stock market has been on a multi-year growth, almost uninterrupted with obviously with 2020 and the pandemic crash. That again is not a market related issue, is more of a panic situation. But what was I saying? So everybody is considering now, well, there's going to be less money in circulation. People are going to spend more to service their debt, their mortgages, their credit card debt, because interest rates are going up. So that means that less money to spend. Companies have less customers. That means less returns. That means price of the stocks and shares going down. Okay, so this is the thinking. And obviously that brings down with it crypto as well. So all the time that the macroeconomic talk, and we've seen, for those of you that pay attention, yesterday in the UK. Sorry, again, there's somebody else. Please, it's not muted. Please make sure you mute your microphones, okay? Unless you want to intervene and ask a question later. So what was I saying is that I've lost my train of thought right now. Yes, while the talk now is all about inflation, and yesterday in the UK, the interest rate has been raised by another quarter of a percent. So it's gone from still at very low levels, from 0.25 to 0.5%. But the cost of borrowing is going up. Okay, so this is seen as like the central bankers, they are trying to get a grip on inflation, which is at the highest level it has been for 40 years. So over 7% in the US, over 5% in the UK. These are very, very big numbers, okay, for inflation figures. So they need to, just talking about very simply, they need to be seen to do something about it, because they know that wages are not going up as much as inflation. and that means that people are getting hurt in the pocket because they will have less money to spend tomorrow than they have today, and that's not good news politically speaking for any government. So the talk at the moment is to control inflation, and so tighten the monetary policy, raise inflation rates, and this, it is thought, at least, that will bring then the economy to slow down as well. So unfortunately, it's kind of like a very difficult tightrope that they have to walk, because they need to control inflation, but at the same time they don't want to tank the economy. Okay, so but unfortunately, what happens is that with increased costs and an economy that is still weak because the supply chains are still all over the place because of the pandemic, that means that this kind of intervention would probably bring a slowdown in the economy, and then so until the talk moves from controlling inflation to stimulating the economy, which is something that is probably is going to happen in the second part of 2022, because again, the US has announced interest rates rise in March, and then 2 more in 2022. So the numbers will take time to filter through, because so in March is going to be a cost increase from the point of view of everybody's borrowing. So those numbers will start being seen in April, May, June, and so on. Okay, so it is thought that in the second part of the year, they will change their tune in a way from controlling inflation to stimulating the economy, and that now will probably be in the danger of going into another recession. Okay, so when that happens, and especially thinking about in the US, we are in a midterm election year, and obviously power in the ruling party will not want to go into the election with bad news about the economy, which is an election loser. So it is thought that in the second part of 2022 there probably is going to be another quantitative easing of some sort, so they start giving money away to stimulate the economy again. Okay, on different subject. So while all this is going on behind the scenes, and this is what really has been dominating the price of crypto as well as the price of stocks, on the other side, the data of things that are happening on the blockchain is at the most bullish that we've ever seen, because the numbers of transactions on the blockchain, the values that are going through the blockchain are higher than there have been. I mean, I showed you last week. I showed you the numbers from the ARK Investor report. They were showing you that in the US already in 2021, last year, digital wallet transactions like Cash App and Venmo have overtaken credit card and debit card payments. I mean, this is already happening. It's not something that's way into the future. So people are using these things now, today. Imagine when the things that have been announced in 2022, which in particular, I think probably the biggest narrative in 2022 will be scaling solutions. And this is not just for Ethereum. I mean, there's been lots of talk last year about optimistic roll-ups, about zero-knowledge roll-ups that are going to be a big thing in 2022. But also in other chains like Cardano, like Cosmos, like Polkadot, the speed and the number of transactions is going up all the time. I mean, we have seen in Cardano, for example, that recently launched, the first DEXs and the first apps on Cardano. We're going from having blocks that were 15 to 20% full to having blocks that are almost 100% full now. We're talking about over 90% filled with transactions, and it is kind of like a boom of unparalleled proportion. Now imagine what I was saying, where we are already now, and just think about what is going to happen once the transaction gets 10 times cheaper and the transaction get 10 times faster. because this is what's happening in 2022. So optimistic roll-up, zero-knowledge roll-ups, other blockchains like Polygon, for example, are already doing that for Ethereum and the Ethereum ecosystem. Other blockchains are working on their own layer 2 solutions, like Cardano, for example, as well, as we often talk about it, is doing the same thing. But we don't have, let's not forget the other aspects as well. So you should ask whenever you put your money somewhere, you should always ask, how decentralized it really is and how secure it is, because at the end of the day, these are your funds, okay? And although they are on the blockchain and it's fun to be on the blockchain, you want to make sure that you don't, you don't get robbed somewhere along the line because nothing that was your fault, but because it was the protocol's fault. Okay, so we want to be very, very, very careful about this. And on a kind of a visibility point of view, is becoming more and more visible. I mean, obviously, we're talking about metaverse all the time, but also about publicity and advertising. This is kind of the latest thing. Tezos secures a sponsorship deal with Manchester United. And if many of you maybe haven't heard about Tezos, well, you will now if you're in the UK or if you follow football. Even smaller projects like even meme coins like Floki Inu now sponsor a football team in the UK. I mean, this is just growing kind of like exponentially in terms of visibility. Now, I want to just move a little bit from just let me talk about this first, and then talk about some real stuff going on. We remember last year about the GameStop saga. It's now actually the people that the kind of the Wall Street gang that fought against the institution that was shorting GameStop now have taken control of the management as well of GameStop, and they've closed a partnership with Immutable X, which is one of those solutions, by the way, that does that works with zero knowledge rollups that can do like can do, for example, NFTs at a fraction, a real tiny fraction of what it costs to do it on Ethereum, for example. So it's been doing very well lately. Now that they will become more visible as well with this partnership with GameStop, and it's an example of the two, the real world and the crypto world meeting. And this is what we're going to see more and more in 2022, kind of like crypto hitting the mainstream and coming to a shop near you, or a payment solution that you'll be able to use in when you do your day-to-day shopping. Okay, so let's see what they're going to do. I mean, they are developing an NFT marketplace. And obviously, Immutable X is probably the best solution from the point of view of cost. So it's being very fast. It's very fast, and all the computation side of the transaction happens away from Ethereum. That's why they can keep costs to a minimum. And so they bunch up then all those transactions and then record them on Ethereum. But they still pay one transaction fee, but instead of one transaction fee for one minting, basically for one NFT transaction, they put together thousands of transactions. So the cost is spread between all those transactions. So they end up being very, 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 very cheap. Okay, and actually, if you think about it, the more transactions that there are in a block that is recorded on Ethereum, the cheaper it becomes. So it's kind of the opposite of what happens on Ethereum. Okay, so this is very interesting. It's interesting that because a lot of people, obviously the young generation is very familiar with all these things, but from kind of old folks like me, sometimes it's going into a physical shop with somebody that can show you how to do things is valuable. And this is where GameStop came into that as well. Obviously wanted to profit from the NFT, the growth in the NFT marketplace, but also from the visibility on the high street. So that's interesting from that point of view. Now, going on to the real world stuff, there's a couple of things that I wanted to show you from Singularitynet. Many of you have heard about Singularitynet. I know that Roger often talks about it as well. What Singularitynet does is they promote, they're trying to democratize the use of artificial intelligence. Okay, and so what they are doing recently, being the first project that is moving from Ethereum to Cardano, for the simple reason, and this is kind of the kind of things that you don't normally consider. You don't consider when you are investing in a blockchain. But the programming language of Ethereum, which is called Solidity, it is not a very good language from the point of view of programming. And it is the kind of thing, you know, so if you hear, this is the founder, Ben Gertz of Singularitynet, talking, you know, it easily say, well, yeah, Solidity sucks, but it was the only things available at the time. So if you wanted to have a dApp, Ethereum really, until recently, was really the only option. Okay, so although it wasn't, you know, there's only so much you can do with the programming language of Ethereum, but it was all that was available. Now that Cardano's come along, and with a much more mature programming language that allows them to do a lot more, then they can then use the Cardano blockchain to do a lot more as well with artificial intelligence, with what they want to do, and what they are doing basically. I mean, you can read this article if you want. It's on Medium, but I'll tell you that it is quite dense anyway. But what they are doing is that basically they are creating and wanting to do achieve kind of a modularity within artificial intelligence, so that people can buy blocks of artificial intelligence, so that anybody can use, any company can have access to this technology, even if they're not developing the whole stack, you know, of knowledge needed, but can they just like pick and choose what they need to use. Okay, and this is something that they launch in about what they call it, this hyper cycle, and it is possible due to the advancement in both in blockchain technology and artificial intelligence. So this is really interesting. I mean, if you want to learn more about it, go and visit the Hypercycle website. And again, if you really are that way inclined, you can even read the white paper. Although I don't recommend it because it doesn't make a very good bedtime reading. But it's it's very interesting. And these are the kind of projects that are changing the world of tomorrow. Okay, I'm not using hype here, but it is really what these guys are trying to do. Kind of, it's not pulling on price. It's probably not one of the best projects to invest in from the point of view of making money, but this is one of the projects that will change the world of tomorrow. Okay, and this is one project. Another project that they are also, it is within the Singularitynet group of projects, is NewNet, kind of a platform from a democratic, decentralized global brain. So you know, I would suggest that this makes really, really good reading, really interesting. So the kind of things that they're looking at here, for example, is these projects like this, or Reju as well, which is again a decentralized artificial intelligence powered longevity research network. So these are the projects that are trying to improve longevity for all of humanity, not just to produce a patent then the company A or B can use to become incredibly rich, but things that we can all use, and really will be available to as many people as possible once they crack the little blocks that we can improve of to extend longevity at a global level. So I will really encourage you all to go and read about these projects, because whether it is something that floats your boat or not, but these are the guys that are in blockchain for the right reason, okay? Because they are trying to achieve something that allows the whole of humanity to step up at a different level. Okay, so whether it is artificial intelligence for companies or something like this becoming almost kind of like a world decentralized brain, because when we talk about artificial intelligence, we've all heard about the Singularity event, when a computer is going to become more powerful than the human brain, but at the end, when that moment happens, you want to have in place all the structure so they can control, to what purpose this powerful artificial brain is going to be useful. And these are kind of the people that are talking about these things, and they are building structures in place now. So when we do get to that point, then we are in charge, and we can use it for good, rather than all the more apocalyptic events or things that you see in the movies. That could happen when computers then don't need us anymore so much, but they can teach each other things. Okay, because you see, the moment that we are the slowest input of something like, for example, artificial intelligence developing, because if they need to get feedback from us, we are limited. We're very slow with the speed that we interact with the computer. But when they can interact with each other and learn from each other, then that can happen at really, at the speed of light, pretty much. So it is already been shown how, you remember recently when a computer actually managed to beat the world champion at Go, okay, which is a game a lot more complex than chess or other things that computers have already excelled at. Now, after the first computer artificial intelligence was able to do that, then the next iteration was developed a lot faster, simply because they didn't need a human to play against, but they could play against the other computer. And so, instead of having a game that would take an hour, and so you can only have so many games in the day, you can have hundreds of thousands of games in a single day. So the learning process improves so quickly, and it can get results a lot faster. So this is the kind of platforms that are needed to be in place. Okay, and on purpose I have chosen this, which is maybe a little bit out there, really advanced, but to make you understand, taking it down a step or two. The projects like Cardano are the ones that are putting all these steps in place from a blockchain point of view. I'm not talking about AI here, but generally, all the things that are not fancy, that if you announce them to the world, people say, yes, so what? Because they don't understand the implications of it. But they are getting their network ready to work with institutions, to work with national governments, to do things that you can't even think of doing at the moment on the blockchain, but they will be commonplace in 10 years' time. So these things don't happen in a month. They need a lot of work and a lot of study. And Cardano has produced over 120 academic papers. They are reviewed by scientists on every single aspect that you can think of that is needed for the blockchain, and more work they're also paying for and producing research all the time not to do things that earns them money today or tomorrow, but to put building blocks in place to be able to be the go-to point in 10 or 15 years time. Okay, so bear that in mind. I'm not saying that all you should do is invest in projects like this or like Cardano. I'm just telling you, bear that in mind whenever you're looking at things, you're looking at projects, and have a look if it is a real project that can make a difference, or if it's something that's just catching a wave. I'm not saying that you shouldn't invest in either, but just be aware of it so that you can make your decision having all the information you need in place, because it is important. Okay, so if you are a long-term investor, then you should look at these things, because really your focus should be on what will still be there and dominating and disrupting certain markets, or even creating new ones in 5 and 10 years time. If you are a short-term investor, then yes, look at the waves, look at the trends or whatever is fashionable today, because this is how you can money in the short term if you want to do that. But I prefer my interest is more looking long term, because I am also very interested in the future. I'm attracted by new technology, and this is something that really I would do for free. Not just I do it because I have got an interest in making lots of money. Yes, that as well, but it's not my main driver. Okay, so I'm not saying you don't have to be like me, but whatever you do, be aware of the information, and just please inform yourself well before you choose who to get involved with, because that then should determine your choices. Okay, so how much? Okay, look, I've done about half an hour, which is normally as much as I do without catching a breath, as I've done this morning. So let me stop sharing and let's start a conversation. Okay. Wow, we got a nice room today. So are we? Sorry, Duncan, I thought I made you a host ages ago. Let me do it again.
All right, everybody's got them. Just, I dropped into the chat. Can you mute yourself when you enter? Because I couldn't do the setting, but that's all cool. Archie wants to know how you can find out how secure a particular protocol is.
That's a very good question. So and you need to dive into the project itself. So it's not, there isn't a website that will say, I wish there was, that will rank projects in terms of security. But if you start reading about it, if you start informing, and there is lots of material out there, you'll soon get to understand how a project works and what technology they're based on. So, if a project is it's, for example, it's an Ethereum project or Ethereum based project, then obviously you need to understand what technology powers Ethereum. And although you might not be a programmer, and like I'm not, for example, but I can still read what people are saying about different things, and once you listen to enough varied opinions about different things, you can form an opinion yourself. Okay, and also look at the track record of things. Projects. There are projects. Obviously, in January alone, we had over 1,000 new coins, over 30 a day, being released. Okay, so are you investing? So what, if you're trying to buy one of these, then what do you look at? Are you looking at the people that are involved in that? Are you reading the white papers? So it's difficult to say sometimes with new projects, but with projects that have been around for 3, 4, 5 years, I mean, there's loads of material available. And if they are new projects, then get yourself well informed before. Or if they're completely kind of like new coins and you think you're doing ICOs, which I generally wouldn't recommend, try to understand as much as you can before you do it. And if you don't have the time or the inclination to do that, just establish a little kind of like gambling fund separate when you're thinking, okay, I know that this money is just a gamble, and just tell yourself that, be aware this is what you're doing, and then just use that fund, but don't use your general investing fund to invest in things that you don't understand. And that's what I would say. Investing is something about where you do need knowledge, and you don't just go on tips that people give you. Okay, so if you don't have that kind of understanding, then ring fence the money in your investment account, so you know that the money that's invested in things that you understand and can rely on, the things that where you're taking a chance, hoping for things to do well. Okay.
Great. Karen's got a couple of questions, and I think she's going to unmute herself in a moment. But before we come to that, Leah and Tim would like to know more about roll-ups, and Leah specifically the concept of zero knowledge roll-ups, if you would.
Yeah, I mean, it's the difference. There's the two basic differences in. First of all, the roll-ups are scale-up solutions. Because we know that Ethereum has been bogged by basically network congestions for quite a long time, and the roll-up solutions have been developed so that we can detach what's happening on the main chain, which is Ethereum, and what's happening outside of it, because there are things that blockchain, is good for, which is generally being a ledger to storing immutable record transactions. But there are other things that it is not good for, like the computations that need to happen to run certain smart contracts, for example, because it is very expensive to do it on the blockchain. So we're separating the computation layer and the settlement layer. Okay, so the roll-ups solutions, and there are several, do the computation off chain, okay, and then they relay the results on the chain. Okay, so they bunch up all the results and then put them together in one transaction on Ethereum. Okay, so the cost of the Ethereum fee are then spread out across many different transactions. Okay, so it's much cheaper. Now there is a different approach with the optimistic roll-up compared to the zero knowledge roll-ups. Okay, the optimistic roll-ups is basically saying, let's say I have an equation, and I'll tell you the result is 5. So everybody assumes that is right unless anybody can prove otherwise. So that's why it says optimistic, because we optimistic that is right. Okay. Where a zero knowledge roll-up are a more scientific approach, in the sense that we are reporting a certain result. You might not be able to see, for example, the whole working of the equation like you did at school, when you have to write down all the passages, how you got from the initial equation to the result. But here's a proof that the calculation I use are correct. Okay. And it is, it is a much more scientifically secure way of doing the computation offline, and at the same time having a proof that you can check that the process are being followed properly and the results are correct. Okay, so those are the basic differences. And when you can go and read the technical details about the two systems, right, you do need to understand about mathematics to do that. But to understand the differences, it's important. And when you think about it, there are things that are where security is more important and things that are less important. So if you are playing a game, for example, you might not care too much about the security of the transaction. Okay, so one type of solution that doesn't offer, a great security is still okay for a game. But if you're transferring, 100 million of tokens between one wallet and another, security is pretty important to you. So, with the new, especially with the new zero knowledge rollups, what you're going to be able to do is to choose what kind of security you want. So, for example, at the point of the user, this is the technology that they're developing. You'll be able to choose, well, I want this technology to happen here on this side chain, or I may want this to be recorded directly on Ethereum, and I'm happy to pay higher fees because this is important to me. or I'm happier to have less security and doing things cheaper. Okay, so very much depending on what you are trying to do. But from the point of view of scalability, it is thought of of bringing transactions on Ethereum again to manageable levels, because they're not at the moment, and there have been many important projects on Ethereum that haven't really seen the attention that they deserve, simply because people couldn't interact with them because it's too expensive. Okay, so that's the kind of difference between the two roll up. But also, it's not just for Ethereum, but even other chains are using the same sort of technology. I mean, Cardano is developing its own side chains and its own kind of scalability solution called Hydra, and the same things even on the Ethereum ecosystem. Polygon, for example, is invested quite heavily in zero knowledge rollups as well. So it's not just Ethereum itself, but it is a kind of like a blockchain, more of a blockchain issue. That there are things that are better done away from the blockchain and then relayed onto the blockchain with a side chain arrangement. Okay, so that's what I'm thinking.
And one question more, Luca.
Sure.
Very great explanation. Thank you so much. But do I hear you say that, for example, for medical records, for patient records, things would have to be on the Ethereum because that's more security? Is the basic one? Is that then the most secure one?
I think for something like this, I might probably bring up. I think Jonathan is in the room as well. Jonathan is actually involved in studying kind of the identity solutions for Cardano. So Jonathan, I don't know if you want to explain how you can then share which level or which granularity you can share your own information with who you want to share it with.
Yeah, so really good question. I think in terms of medical records, you're talking about some very secure information, but you're also talking about masses of information. So it's an ideal candidate for putting into a Ethereum equivalent is a zero knowledge rollup. In Cardano, it would be a Hydra head, and this is an equally secure method of storage in that it's got all the same technology behind it as the layer 0 chain itself, or layer 1, but it's got the advantage of being some mechanical advantage, like it can hold vast amounts of data, or it's extremely fast at processing transactions. And so with medical data, it will be likely stored in a side chain rather than on the blockchain head. But in terms of accessing it, then you've got all the same protocols and security as you've got on the main chain as you do accessing the side chain. And yeah, your explanation of zero knowledge access was spot on. You can receive that information without knowing the whole picture. So it's like if someone was showing you a picture, or had a picture that had a piece of information in it, a bit like "Where's Wally?" You've got the little, you know where Wally is on your picture, and you want me to prove where Wally is without, and I don't want to let you know exactly where it is. I just have to know, I know the location of Wally. So I could put a card in front of my "Where's Wally" picture with a hole in it, and just move the card over the face of it to where Wally is, and say, see, I can prove to you that's where Wally is, but you don't know how to find Wally if I showed you the whole picture still. And so that zero knowledge is that I haven't given you full information, but you know where it is. So that's the sort of granularity that Luca's talking about. You don't have to show your whole portfolio, passport, bank records, just to know how old I am and whether I can get into the bar or not. So,
can you, Jonathan, can you explain, for example, you're talking about here medical records, and the difference, I think, in blockchain, I think, is important because different from your medical records being in somebody else's hands and you having control, for example. So in practical levels, how can you then, whenever you go and you want somebody to access your medical record, how can you then decide to show only a part of it? And physically, how would you be able to do it then once these are stored on the blockchain?
So the people who are trying to query it would have a certain level of information they needed. So if it was, okay, we just need to know if this person has, I haven't thought of it through the medical implications entirely, but say you were a runner and you did a lot of solo events, and you were if you're diabetic or something, and so you would have your bracelet that would show you any first aider what your condition was. It'd be a bit like that, apart from having something public and obvious that everybody knew what it was. So say it was just a device that you carried like a phone, but eventually it's going to move into something more robust. But the first aider would be able to just come along. You would put your thumb against your device that would release that information, and then the information would be available. And the questions that would be asked would be, not what's the drug take habit of this individual. It would just be, I just need to know whether this person is diabetic or not. And so the answer would be a yes/no answer, rather than, okay, here's his medical history and all the drugs that he's on and which doctor he's been seeing, and the period in the 50s when he got into hallucinogens. It's very narrow view onto a broad spectrum of information, and that would be done by releasing it through a device like a phone for now, with your thumbprint recognition or your facial recognition, something like that.
Thank you very much, Jonathan. This is kind of a glimpse into the future. I mean, just to compare, this is something that happened to me a few years ago by going to my doctor, and I had some back problems. I was going to an alternative therapist, and I wanted to show my X-rays that I had done, through the NHS. So I went to my doctor and asked him to have a copy of my X-ray, and the receptionist said, "Well, we can't give you that because of Data Protection Act." I was thinking, well, I'm sorry, but who are you trying to protect? if it is my data and I want to see, are you protecting it from myself? So this is the kind of things that difficult to understand sometimes, but how important it is that we have control of our own data instead of somebody else that can be. I mean, in that case, they were completely wrong, and I just needed to speak to a manager to release it. But they're showing you sometimes you put the power in the hands of people that are not able to use it. So we don't want to be in that situation. We want to be in control of our data and how it is shared, and who can get access to it. So, okay, let's move on to another question. But thank you very much, Jonathan, for your expertise. You become the identity expert now. Okay, and we have any other questions? And there was one from.
Yeah, so Karen had a couple of questions. She had her hand up earlier, so I think it's only fair that we bring her in. And then Abby also has some questions, I think, or at least has his hand raised. So we'll come to him next.
Yeah. So okay. So what I was wondering is Solana going to tank? Do we think, with what's happened? Do I need to sell my Solana and buy something else?
That's completely up to you. I mean, I've made no secret that I'm not a lover of Solana, but I don't think it's going to disappear because what they do, and sometimes you got to realize what people and projects are good at, and you got to acknowledge it, and they're excellent at marketing, and especially in a way where a lot of people that come into this space have got no clue what blockchain is. And just come into the space because they're playing a game, or they just bought an NFT that they kind of like that their friends are recommended. So Solana will always have a space for that. If you say, are you going to be sure that Solana is going to be there in 10 years' time? I don't know, to be honest with you. I wouldn't bet anything on it. But in the short term, it's got a lot of hype around it, and that will carry on going until there is something else that overtakes it. Because you see, the point is they bet everything of being on two things, okay, on being fast and cheap, and two, of being in the trending markets. Okay, now the fast and cheap will soon be not a selling point anymore, because there's going to be a number of things that are fast and cheap just as much as Solana are. So once they lost that kind of like unique selling point, what's left? Are the other things strong enough to make them carry on, or are they developed an advantage in certain areas like gaming, for example, or NFTs that can carry them through? So that is for me, Solana is a little bit of a gamble from that point of view, because I don't see the other aspects of actually blockchain. But I wouldn't tell you sell it or do that, because it is one of the top 10 projects, and it's not going to disappear anytime soon. But we've seen what happened this week, with the hack, with the fact that they switched off the blockchain already 2 or 3 times, the same way that you would switch off a television. I mean, it doesn't really inspire you with confidence.
No, I think I'd rather put it in Ethereum. So also, what's the ticker for the brain one, the new man one?
Newnet. Newnet,
that's it.
Yeah, NTX.
NTX, okay. And last question, MetaMask. I was just talking to somebody the other day, and they were saying, they know loads of people who've had it hacked, and I'm like, well, how's that possible without knowing your seed phrase? Is it possible to hack something without knowing your seed phrase?
Well, it is somebody, if you download any software that gives the hacker access to your computer, because you can't get into your wallet until you get onto your physical computer, because your wallet lives on your browser. So it's not just is that particular computer and that particular browser. Now, if you don't have access to your computer where you have your MetaMask, then you have to have the seed phrase to generate it on another computer. So generally, I mean, all the hacks that I hear about is one of these two things on MetaMask. Is other people that, and the most dangerous thing is on Discord. So you be very careful if you're on Discord, because at some stage, and we're dealing with crypto, we're dealing with new projects that we don't understand. And often we will ask for advice to the community. And somebody will pose as customer services or something like that. And at some stage, they'll ask you to click on a link. They'll then will ask you to put in your seed phrase.
Yeah.
So that's how people get hacked. Simply.
So I will never do that. But I was just wondering about other ways I need to keep it safe. So if they can access your computer, how can you keep it safe?
You can connect it. You can connect it with your ledger.
Right. Okay. Right. I'll ask you about that again when we do a one-to-one.
Yeah. So basically, if you connect it with your ledger, then people do not only have to have access to your computer, but also they have to get access to the physical device, because you need to then authorize the transactions with your ledger.
Right. Okay. No problem. Awesome. Thank you, Luca.
Okay.
And so over to Abby. Would you like to take it away?
Yep. Just my question is in regards to taxation. Now I came to know that even if you're not buying, you still have to
Abby, sorry, I can't.
I've invested. I'm not selling or buying or doing.
Abby, I can't.
Abby, might be an idea to knock your camera off and see if that gives you a better connection.
I was going to say the same thing.
Now?
I can say the same thing. Not take your camera off, because that will reduce the bandwidth, and it probably will be able to hear you better.
Got a very funky background there as well.
Yeah. Say again. Start again.
Can you hear me now?
Yeah. Better.
Can you hear me now?
Yes, we can. Yeah.
All right. Okay. So I was asking in regards to taxation. Like if I've invested, I'm not selling or selling or doing trading or anything. But if I'm just holding on, do I still need to declare for the taxation purposes, or is it only when you buy and sell you have to declare?
It depends. That depends very much on the country where you are, but generally speaking, most countries charge crypto as an asset. So you have to pay capital gains when you sell it. So unless you sell it, you wouldn't have to pay anything. What you got to be a little bit careful of is if you stake your tokens, then staking rewards are income. So they treat it like for example, bank interest. Okay, so that one is part of your or your income. You'll have to pay tax on, but the tokens you only have to pay capital gains tax when you sell them. And again, here, when you sell them,
and this is,
you really need to speak to an accountant, because it really depends on the country to see. For example, if you bought some Bitcoin now, you buy some more tomorrow, some more in a month. When you sell it, which one do you sell? Is it the first, the second, or the third one? And in that case, that varies depending on the accounting standards adopted in a particular country. So I can't just give a general answer. You need to speak to an accountant for for those aspects.
This is for UK basically. I bought all of them in UK, and I was told that you still have to declare whether you're making profit or you're not, but you still have to declare all your cryptocurrency holdings to the UK government.
It's news to me, but
for the HMRs.
What like, do you have to declare if you got money in your bank account?
I don't know. I was confused myself. So
what do you have to declare?
Said you can be penalized if you don't declare your investments.
I think it's in terms of your, again, if you sell and you have taxable gains, then obviously you'll be tax evading if you don't pay them, but if you don't declare it. But until you sell, I don't see that there's anything to declare. But I might be wrong. I'm not a tax advisor, so go and ask your accountant about that. But so that's for me. I mean, how I see is either capital gains, which is only when you sell, or income, which is if you get airdrops or staking interest or things of that sort. That's income.
Great, thank you, Luca. Thanks, Julie.
The best way to avoid taxation is to follow my investments, and I guarantee you won't make much profit. But that's just me. It's not because I follow the advice here. It's because I do the odd silly thing. But it's a surefire way to stay out of the sights of the taxman. I can guarantee you that.
Very true. Very true. And by the way, just as we're talking about taxation, crypto exchanges. So if you exchange from Bitcoin to Polkadot or something like that, that's still a taxable event. Okay, so you got to be aware of that. So it's not just selling them to take money out and put back into your bank account, but anything anything you do where you exchange from one crypto to another crypto is a taxable event. Okay, so but again, you need to find that rare thing, which is an accountant that understands crypto. Okay, and they will sort you out. All right.
Thank you.
You're welcome. So any other questions?
No, I did. What software did you say could calculate tax? Karen would like to know.
There's lots out there. Quick Google search on crypto tax software will bring out whatever it's in your country. You can use Coinly or CoinStats as well. Pretty good, but I say not particular. Recommending any one of them. There's lots of software out there to calculate your crypto tax. I would say have a good look at what social media say about it. People actually using it before you dive in and pay for anything. But yeah, there's plenty of stuff out there to do your crypto taxes. But it's good that even after you use those programs that you refer to an accountant, just to make sure that you are an accountant that understands crypto, obviously.
My final point, I've just dropped into the chat, guys. If there's anybody on this call who hasn't joined Luca's community, they're on GU. There's the link. You can watch the call recordings, and we can communicate with each other in that group anytime you like. So please do join that. Back over to you, Luca. Just wanted to mention that.
Yeah, no, thank you very much. As I'm not normally good at promoting myself, so thank you for being there and being aware and pointing people in the right direction. Thank you. No, it's I pretty much said everything I need to say. So unless there are any other questions, we can adjourn to next week.
That's I think we're all good for today. It's been a very interesting crypto hour as usual. It's been an interesting crypto week, as it seems to be getting as well every week. So looking forward to next week's already. Personally, hopefully see everybody back here next week.
One thing actually I wanted to close with before we go. I mean, for me, the main thing of the week has been FUD. Okay, fear, uncertainty, and doubt, and that's what's hitting the markets right now. And it's getting to the point where it's almost ridiculous. Some of the things that you read, even in almost like trusted crypto publications, are so untrue to be laughable. But the point is when these things mix, and you mix real news like what we had in the US and kind of a monetary tightening like that, it seems that all of a sudden when we have some bad news, there is a ton of things that are resurrected, and they just dumped on the crypto market to basically get it down as much as possible. Okay, and we got to a point where we've heard so much of it. I think we're almost like hitting kind of scraping the barrel, and so I'm saying start paying attention, because normally when things look bleak, like it couldn't go any worse, and normally something happens that shortly pushes things even lower, and then after that we start having the growth back to new highs. Okay, but the one thing as well is that to be aware of, with Bitcoins being taken constantly off the exchanges, there are less and less Bitcoins in circulation. So whenever we start having a movement in the other direction, things starts going well again, the prices are going to move very rapidly. Okay, because there's little supply, and we just need to have kind of a good demand pushing the other direction, but things will happen quickly when they do happen. Okay, so there is not going to, I mean, if you are thinking, sitting on the sidelines, before you take action, I think take action when things sound boring. Okay, when it doesn't look like there's much going on, because the moment that when things start happening, and it may happen when you are sleeping, or when you're not paying attention, by then when you decide, oh, I better do something about this, it might be a little late. Let's put it that way. Okay, so I wish you all a good week. Good starting.
Luca, just one final point. Julie asked if you could drop her your link for your one-to-one call for your Done With You community. So just thought I'd mention that to you. It's so that Julie knows we're onto it, but I'll remind you after the call, and we'll drop Julie your Calendly link. Okay. Okay. Yeah, sure. I'll send an email out with the link again. Okay. All right. So thank you very much, and I will see you again next week. Thank you for being present and being here with me. Thank you. Thank you. Goodbye, everyone. Thank you all. Bye. Bye.
Thanks. Bye, everyone.
Goodbye.